The United States government owns about 900,000 units of public housing, not Section 8, that they actually physically own, right? So when we think about slums, the biggest slumlord in America is, unfortunately, America. Don't shut up about what you're doing, what you want to do, have to get that why, right? We talked about, and tell everybody you can about what you're doing, right? In the beginning, I'll be honest, Kevin, when I first started in real estate, I just wanted financial freedom.
We were in negotiations.
Investing in real estate, they're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amos. We are back having such a great time with this podcast, helping real estate investors and real estate educators. So you're out there building a portfolio, maybe you're fixing and flipping properties, or you're out there providing education to other investors. This is the podcast for you. I have another super cool guest. I'm excited about this one, guys. I got another great guest with me today, Mr. Jesse Sells. And the reason I'm excited about this is because he has a big fund, guys, $300 million fund. He got to start back a while ago. He got to start doing fix and flips and then quickly turned it to syndication deals. And I think it's 26 now successful syndication deals you put together and a $300 million fund. You're currently the COO of Impact Growth Capital. Welcome to the show, man.
Awesome. Yeah, Kevin, thanks for being here. Or let me be here too.
Yeah, no problem. Well, I want to get to know you a little bit better. So you started off like so many of us do, just a little single families, maybe one at a time kind of thing. And you wanted to get into real estate because of the financial freedom potential. But take me back, man. How'd you get started in real estate? Why real estate and why fixing and flipping?
Yeah, so growing up, I've always lived in a house that was in some form, shape of remodel, right? So my entire life, I've been part of this where we're all sleeping in the living room because the bedrooms don't have ceilings, right? Or, they're all down to studs. So I've always been around this world, and I've always found the same statistic over and over again, that 90% of millionaires got there through real estate. So the power has always been there. As we were talking about before the show started, I've been doing a lot of kind of fix and flips or renting out my single family homes as I progressed through the military over 11 years. So very slow, nothing really quick. But it wasn't really until I got out and I discovered what syndications are and went to YouTube University, where I really kind of made that big leap ahead.
Okay, so what branch were you in?
Air Force. Yep.
Air Force. Okay, I spent 4 years in the Army. So, and
sorry. Sorry to hear that.
Yeah, I got out and I got into real estate also. But I learned about real estate while I was in the military, similar to you, but I was just reading books back then. I didn't actually start doing deals until I got out. So how did you do that first one while you were in the Air Force?
Yeah, so we found a mobile home park. We did 2 mobile home parks initially, kind of back to back. Owner financing, and then we just did a capital call with people that were in the military, friends, family, anybody that would answer the phone to do the first ones. And the power of this, we'll kind of go back a little bit, the power of doing syndications and being a part owner of the larger deal than just doing single family homes, which is what most people kind of focus on. I did the math before and I figured that on average I was making about 150, 200 bucks per month, just cash flow and on my homes. Well, dude, I need like 70 of these to get financial freedom.
I learned the same thing.
So yeah, we did this 2 first mobile homes, did a syndication with anybody that would answer the phone, and we made $6K a month right away. Awesome. So that's basically when I went full time. And then I was running crews and doing the remodeling and doing everything possible at those mobile home parks until we started scaling.
Yeah. Okay. So how you started scaling? So how big are you now? Like, what's the team look like?
Oh, shoot. Well, we were all vertically integrated. So we had our own property managers, maintenance, like everything inside. At one point, we got close to 50 employees. I want to say like 46 employees. We've got around 1,400 units. A lot of that's changed recently where we're being more targeted in what we're looking at, selling a lot of the smaller properties. We don't do property management anymore. We offloaded that part, third party. So now our team is like 13 people, very, very small, but more targeted.
Lean and mean, huh?
Yeah, lean and mean.
And it's probably way easier and more comfortable for you, I would imagine.
Yes.
Yeah, managing people is not always easy, is it?
No, it's you're babysitting at some points. Yeah.
You look happy. You look successful now. So you are working on something that's a little different. I think one of the reasons we wanted to have you on the podcast, a little different than most syndicators, because you're working with governments, right? And you mentioned here that you are privatizing government something,
Yep.
public housing,
It's
like
something.
government housing, subsidized rent. I'm trying to vision, like, how do you privatize that? What does that even mean?
Yeah. So what we realized, so I've done, the only thing I've ever really done in real estate is affordable housing. So big A, little a, Section 8, big A is in, actually funded through the government. And then little a, of course, is just market rate, but Class C properties. So I've got to know this world quite a bit over the past few years of doing this. And what we discovered is when we start looking at the numbers, the United States government owns about 900,000 units, the public housing, not Section 8, that they actually physically own. Out of those 267,000, it's roughly 30% of them failed their own livability assessment. Holy cow, they're not even livable, right? So when we think about slums, the biggest slumlord in America is unfortunately America,
Yeah,
right?
that's crazy. I had no idea.
Yeah, isn't insane. So we looked at this as like an opportunity because we did the math, and it's gonna be about $200 billion what we estimate to fix this issue. The government's not going to pay for that, right? So we have this massive issue. The HUD Secretary Scott Turner has a great quote, says that public housing Section 8 was meant to be a trampoline. It helps you when you fall, but it's not meant to be he calls it a hammock, right? So what we're doing now is we're finding local municipalities, local public housing authorities, and privatizing or doing what's called a public-private partnership. So a P3, and working directly with them, where we now bring our investors through our fund in. We take over public housing, whether we demolish it, rebuild it, and now it's just a traditional investment, but we get grants, we get subsidies. Also, the funding deck, how much we need to raise is 15% instead of 30% of how much capital we need to bring into the deal. So it's super secure, lower risk, and the U.S. government is now our tenant. So not a
Okay.
bad person to pay the rent.
Yeah, let me make sure that I understood what you just said to me. So you're actually taking ownership of these properties, so the government's selling it to you in exchange for buying them from the government, probably at retail price. You're getting free money and grants and some maybe favorable financing. I think you said it's more like a 15% equity injection instead of 30. So it's an easier way to get in. Did I hear
Yeah.
all that correct?
Yeah, let me break that down a little bit deeper. So a traditional capital stack is the word I was looking for a second ago. Right to close a property, you need 20%, add another 5, 10 for holding fees, everything else of cash you need, and the rest you get financed, right? So big numbers, make it easy. 30% you need for capital to close our project of the valuation. But with all these grants and subsidies, what we're seeing, what we're seeing other people do is it's closer to 15% because the other 85 is now grants, LIHTC equity. There's tons and tons of different resources out there, and even revenue bonds. So you don't have to pay any holding fees for your loan until you're making money. So if you're generating revenue, so completely changes the underwriting.
So the real value in working with these public-private partnerships is the favorable financing.
Favorable financing, and then depending on what news channel you look at, either the sky's falling or everything's amazing. So if we do go into a crazy recession, this is very recession resilient. Again, the federal government is paying the rents for majority of people.
So so it's like a lease back.
Yep.
And it is a lease back.
Yeah.
And then they sublease it out to families in need, or they just give it to them, let them live there for free, kind of thing.
Yeah, so public housing. So we still manage the people, everything else, and what we're doing. So our company's called Impact Growth Capital, and the reason why we like this space is we like the impact we can have here. So the reason why we're getting sole source and why we have cities like Las Vegas and Cincinnati and a bunch of 7 total, so 5 other cities coming up to us and asking us to come do this at their public housing authority, is because our entire goal here is to get people off the system. to get them out of Section 8, to get them good jobs, to get them the mental health they need, to give them daycare services. So we actually have a nonprofit that's attached to the fund that actually
see.
provides those wraparound services for everybody that live there.
So someone investing with you probably get a nice little return and they're making a difference.
Yep. It's best of both worlds, right? Profits, but also with a purpose.
Yeah. Okay, cool. So, what's interesting about this conversation, Jesse, that we're having right now, we're in May, we're in the middle of May, is the release, the new information that's just coming out from the Trump administration about getting rid of Section 8. So what he's proposing is significant funding cuts to the program, as well as limited time, so that someone could be on a voucher. So what you're saying is kind of like helping people bounce back and get into the, back on their feet and working again. That's supposed to be the point, but I could tell you from firsthand experience, I have tenants that I've had for over 15 years that are on
Yep.
Section 8. Like they're never going to get off of it.
Yeah.
So I don't how are
Why would they?
well, of
They're not
course,
incentivized. Yeah,
of course. So what do you think about the new Trump? And who knows by the time this airs, what's going to be happening? But as of right now, that's what is just coming out. So what are your thoughts on that, and how does that impact you?
That's a great question, and who knows, right? I think things change so rapidly with this administration right now, for good and for worse, however you want to look at it. But what's interesting, actually, Kevin, is today my brother and business partner went to DC and he spoke with Scott Turner and Frank Cassidy, the deputy director, about what we're doing, our plan. Just got to get support. They love what we're talking about. They love the idea of doing this in a ethical manner, not just cutting, everybody's Medicaid and support and getting them off Section 8. This is a path forward where we work with local nonprofits. We have a nonprofit, but really that's an administrative nonprofit to work with the Goodwills, with the Catholic Charities, to help people find jobs and get them off, right? So right now, it's a great question. And if I had a crystal ball, I wish I could tell you. But right now we're seeing support from the local public housing authorities as well as at the federal level for what we're doing.
Yeah, and so and that's another thing that Trump wants to do is make it very local.
Yep.
It's much easier for local governments to handle this subsidized housing.
Yes.
So I think this is great. Okay, and maybe what I think would be helpful for me and maybe the listeners, if we could just walk through like a typical type of deal, like how many units is it? What do the numbers look like? How long are you in? What's your exit strategy? Those types of things. Maybe
Yeah.
the last one, or if you have a good example you want to go through them.
Yep, absolutely. So right now, let's talk about the one we just got like 3 weeks ago, assigned to us. So the typical, just for everybody's awareness, the typical RFP process, or request for proposal, that's when the public housing goes through what's called the RAD program, a bunch of other acronyms. But essentially, they take their
You're
time.
losing me.
Yeah. If you're in the military, you're like, no more acronyms. I'm so tired of this. So essentially, it's a process of how to do the public partnership or privatize housing. That takes forever. You get proposals for 3 months, then you think about the proposals for another 3 months, and then you release things in it's a year plus for anything to happen, and it sucks, right? Dealing with the government is always rough, right?
Yeah.
So what we currently have right now is our current contract with Las Vegas is 300 units to demolish, build 600 more.
Okay.
Again, working with local government, though, we got that assigned to us, and we're still working through the details. How many 2 bedrooms? How many 3 bedrooms? What timeline? All that kind of stuff. And that's been over a month of us working through the details after we've already been awarded the contract. So it does take time, unfortunately. But what we're doing with our fund is 5 to 7 years with 2 extensions for the fund itself before we sell or throw it on a REIT and exit out our investors. So during that time frame, we figured for developments 2 years, but we're also looking at taking over existing properties as it is today, and that we can do pretty quickly because all we're going to do is set up our own little center there. So we have daycare on site, transportation, allow people to actually thrive. I think that's a big issue when you look at public housing and just lower income. Is there's so many different things that prevent people from taking that next step.
So in a typical syndication that I see, they're almost all value add type stuff, which is exactly what we're talking about here. 300 turning it into 600. You're adding value to that property.
Yes.
And so usually we'd see like a time frame, maybe 7 years, something, then you would sell it, or maybe you would refinance, get all the investors their capital back, something like that. What I'm not hearing here is like a clear exit. So if you're going to build 600 units, that's going to take you many, many years to get to the finish line. And then what? You just hold on to this forever? Like, what's the plan?
So this one is a 5-year exit. So 5 to 7 years exit here for this fund.
So you
we'll
would
have other funds
sell the property.
sell the property. Yeah. And what we'd probably do, just honestly, just sell it to ourselves, sell it to our different REIT for long-term hold for different type of investors. We have other investors that just want to do opportunity zone, but that's 10-year holds. So it just kind of depends on what you want.
Are you still
as an
seeing
investor.
opportunity zone? It seems like that's sort of run its course.
Look, I don't know what's going on with it.
They're going to have to renew or extend some of those deadlines if they're going to keep that going.
I think they are, just talking to those guys at the federal level, that's on their bucket list to extend those.
Okay.
But yeah, honestly, one of our first deals, we were looking at opportunity zones. We had a rough time because no one wanted to be stuck in that deal for 10 years.
Yeah.
Yeah. But then we talked to family offices, institutional partners. They love it because it's more about capital preservation with them and long-term view. It's not getting my money back. So different clientele like different things.
Okay. So you're going to build 600 units. The investor's going to be in for about 7 years. So it sounds to me like you're doing syndication, like single purpose LLCs probably.
Yep.
Where it only owns one project. And then your $300 million fund, which I would like to get to, is separate. Is that your REIT? Is that what's buying the properties from yourself?
Yeah, so
Or
that's
how does
going to
that
be
come
the $300 million fund will own the LLC and then invest into each individual projects. And that way we can do sidecars or we can do earmark, so I want to invest in Las Vegas because it's my backyard. I want to invest in Austin, Texas, cool. Easy to do that and get it separate. Of course, your returns change then. So that's a conversation because if we're doing like an 8% pref, well, it's hard to do if the development takes 3 years.
Yeah, exactly.
Yeah.
Okay, so you could do someone wanted to invest in your $300 million fund, and then they could allocate that money to certain like geographic regions or maybe even state level. It sounds like. Okay, and your software does all of that, huh?
Yeah, yeah. And since we bumped up to 300 million, it's we're hiring these experts in the field that actually do this for large family offices. So we're not using the same software as we were when we first started out.
Yeah, I'm sure.
Are
the actual REITs, or what's the structure with the SEC for that fund?
It's just a 506C.
506C
fund. Yeah. So
Okay.
credit only, not a REIT.
Okay. And minimum investment?
Right now it's 100K, but we're moving that up to 1 million. As you can imagine, it's 100K is a lot of investors for 300 million fund. Yeah, it's a lot.
So you're getting like institutional type investors.
Yeah.
A lot of family office.
A lot of family offices, a lot of a different ball game, right? Especially in the military, you're talking to people getting 10K, 5K, 25K for 506Bs. Then now I'm going to the fanciest dinners and the weirdest people I'm meeting because ultra rich people are just interesting people to be around. But yeah, now it's different clientele.
Yeah, that's it. That is interesting the way you describe that. So in the military, you're not running into $1 million minimum investors.
Yeah.
So how do you transition? Like, walk me through that. Like, how do you land your first $100 million investor? What's that look like?
Oh man, I'll let you know when I find them. So we have a lot of like 10s, 20s committed. We haven't got 100 yet, so I am taking recommendations though.
Oh, did I say 100 million? I meant 1 million.
Okay, yeah, 1 million. We've got a few of those. Yeah, they're out there, especially like a lot of these oil and gas guys. The last one I got made a ton of money in oil and gas, which I guess are hurting now. But it just sits in their bank account. Oh, I can just forget about this. Let this give me the passive income I want to survive. We're going to all these conferences. Like the Milken conference was a great one I went to recently. Had a ton of great meetings with people in LA. That was a couple weeks ago. Yeah, it's a lot of private events. That's where we're meeting them. That's where you really make an impact, Um, it's hard to go to conferences and meet the right people because everybody's there trying to learn to do the same thing you're doing, right?
Yeah, that's what I've experienced from the conferences. Everyone's trying to raise money. It's very few people actually looking for investments.
Yeah.
Because look, investments aren't that hard to find. I get 2 or 3
Yeah.
syndication deals on my email every single day.
Yep.
So it's not like it's that difficult, but it's hard to go out and find the money.
Absolutely. Yeah, that's why we changed it. And now that's why we're looking at doing these private, more tight-knit events where we will pay for the caterer, we'll pay for we'll host it somewhere and then invite 10, 20 people maximum and just have kind of intimate discussions and conversations about what we're doing and how people can actually make an impact. I think we're doing a lot better with family offices because the impact piece, right? Institutions are just giant companies. So they're hedge funds, they don't like what we're doing because it doesn't make sense to them. Why spend the extra work doing all this extra stuff or impact when you could just get a return, right?
This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. It's very interesting because we know anyone who's studied marketing at all knows what you're talking about. The story, being able to market a story is much easier than being able to market a product, right? And so you have a fantastic story. You're out there making a difference. You're getting people off the street and making them functional and, functioning citizens again, right? So that's a fantastic story. I don't know where I'm going with that, if there's a question there, but I just noticed that when you said that, the impact that does help you bring in funds, I assume.
Yeah, absolutely. And at the beginning, I'll be honest, Kevin, when I first started in real estate, I just wanted financial freedom, right? But then you can't help when you're on the ground working with people, start talking to them, you can't help but see where I've been personally or where my sister's at right now, the people in my family that are on food stamps or have been. And all of a sudden you see, oh man, like we can have a massive impact. And all it takes usually is just extra legwork of finding who to call, which charities, which groups in the area will help certain people. Calling and creating a daycare package for 20 of your residents, and now they get a better rate because you're negotiating it for 20 people. So it's just more legwork for us, but for our residents, for the people in our community, it's a huge difference for them.
Yeah, man, that's really amazing. I feel like I have my why also similar to yours. It's not as deep as yours. I'm helping, people that are pretty well off, like become better off, right? So it's a very different story. Maybe I need to come up with a better story to market, but great job on all your success. Now, 26 syndications successfully, $300 million fund. What I don't know is how long you've been doing this.
So not that long, about officially on the commercial real estate side, about 8 years now.
Oh yeah, that's good.
Yeah. So of course, the flipping homes, renovations since, I don't know, probably 07 or something like that for me. But for the commercial side, syndications, JVs, institutional partners. Yeah.
Okay. So you've had a great run because even with COVID, which was supposed to put us into a recession, we got bailed out by the government, right? So you haven't really seen a recession or any slowdown until right now, other than the financial crisis, which you weren't even in commercial back then. So what are you seeing today currently, and how's that impacting you?
Yeah, and that's exactly why we pivoted to what we're doing, right? Maximum impact. But if you look at 2008, right, when the recession happened, Class A got hurt the worst. Then it was B, and then C slightly, but wasn't anywhere close. So if we're doing these public-private partnerships with the federal government, I don't see how this is going to really impact us on a massive level. It may impact us for just these nonprofits getting inundated with people that need support. So it may impact us on that side. But again, we're also raising capital for that. And we already have 3 million allocated for our nonprofit in Las Vegas to support our residents. So, but yeah, just we're
Okay.
looking at risk mitigation, and that's what I'm hearing from family offices, institutions. Everybody's nervous about this.
You know why everyone's nervous? Because no one knows what the hell's going on.
Yeah,
Like
I don't think
literally,
anybody does. Yeah,
the news is changing. What the last I read, Jesse, is we are getting very close to 100 separate tariff policies
holy cow.
in this short time. Can you believe that? And sometimes there'll be policy changes or announcements more than one in a single day. So
Yeah.
like, how does anybody really keep up with it? That's why you're seeing so much volatility. But real estate continues to hold pretty strong, although we are starting to see a couple of cracks there as well.
Yeah,
I like what you're
I'm
saying.
nervous
I mean,
about that.
the government is your primary tenant. You're getting favorable financing. Are you getting favorable interest rates also?
Yes, yeah, absolutely, because they can't be
How
tied
does
to
that
revenue
look?
bonds. So it's
Okay.
a lot better than, yeah.
Are they still qualifying on like a DSCR, debt service coverage ratio?
Yes, it still is. But again, it's supplemented through the grants and other subsidies. So it's a little bit different as what we're seeing from people.
So when I think of grant, I think of a one-time here. This is to help for the public. This do something that helps the public.
Yeah.
But maybe I'm not hearing it right. Is it like a residual or a monthly type of grant or some kind of
So,
subsidy monthly?
you know what sucks about this question, Kevin, is it depends, man. It's
Yeah. Yeah, I should
everything's
have
so
known.
localized. So it's easy to say kind of big, no, grants are awesome and revenue bonds. I don't know if I can get revenue bonds in Cincinnati, but I know in other places they offered them to us, right? So it's going to be kind of a case by case basis, and what that public housing authority and what that city wants to provide for us, and
What's
that's
a revenue
why.
bond? I don't even know what that is.
Yeah, so it's basically debt. Like it's based off the interest rate's based off the bond rate, right? So as long as the treasury stays good, and Japan doesn't sell everything, right? But then we don't pay back any interest or anything on that until we start generating revenue. So if that's 2 years, that's fantastic. Yeah, then your holding cost changes dramatically on that. But yeah, it's back to the other question. That's why we're negotiating. This fund's only going to be in probably 2, maybe 3 cities. We already have 7 interested. So that's what we're going back with them. Hey, this is what we're doing. This is how far we've gotten here, here, and here. You know, you've got to provide more on the table, because this is a massive issue everywhere. Again, 30% of all public housing failed its own livability assessment last year.
That's unbelievable.
They've got to do something.
I tell you what, man, one of my favorite things about doing podcasts and having guests like you on the show is how much I learn. Like you never would have given me 30 minutes of your time had we not scheduled this, right? And then I get to sit down with you one-on-one, take some of your time and learn from you. And that's pretty awesome.
Yeah,
you know? So I want to
absolutely.
learn a
It's
little
fun.
bit more here.
Okay.
You've got a lot of experience. You started off like so many of the listeners, just single family homes, and then you turned it into a big operation. Sounds like you're doing extremely well. So what advice would you give maybe a newer investor that's doing, 1 or 2 fix and flips every year? The market's tough, the inventory is low. It's just a grind. What advice would you give us?
Man, 2 things I always kind of talk to people about for advice. And number one is don't shut up about what you're doing, what you want to do, have to get that why, right? We talked about, and tell everybody you can about what you're doing, right? Because you'll be surprised about the opportunities that are out there, the people that are looking for partners, the people that are interested in doing real estate but don't have a trusted partner or somebody they know that they can work with. You never know. One quick story about that. There's a lady, lower income neighborhood, right? But there's a lady in our old neighborhood that gave us $90,000 because we used to mow her grass. I had no idea, right? She was also in the same neighborhood I was, right? We didn't have money, but you just never know until you start talking to people and you say what we're doing. Second off is I'm a big build a plane in the air, right? If you wait forever for everything to be perfect, it's just never going to happen. There's always going to be something going on in the market. There's always going to be something where someone tells you that, no, it's just stupid. Only focus on what you can't control, and don't be scared to swing for those bigger projects, or else you're never going to get it.
Like someone's always going to try to hold you back.
Yeah, and
I know I found that in my career also. Some of my closest friends, Jesse, would
Yeah.
try to bring me back down. And I don't know if that's a jealousy because I'm starting to have some success and they're not, or I guess I'm speculating. I really don't know why, but I know it
Yeah,
happens.
it does, man. Yeah. Everybody wants to support you until you start winning and they get jealous.
Yeah.
It's
Seems like
yeah,
it.
yeah. So that Alex Ramosi said something similar to that. And I was like, man, that's so true.
And then you have people that are quite the opposite, right? And I was going to say usually they're more successful at the time when you meet them, but that's not always true. You you will have people in your sphere that will really try to lift you up also. And I think the key is to try to identify the two and then choose, which one you spend time with. And like I say,
Absolutely.
it's not always your family doesn't always make the cut,
Right.
right?
But you have to surround yourself with people that get you and support you, or else your mindset changes too, right? So you got to find a way to keep your family as your family, but
Yeah.
also realize that they don't get it, or that they're holding you back at a certain point.
Yeah. I
Can't
just
be.
think of that because I mean, and look, I'm not suggesting you cut out your family. I know it sounded
Not
like
me
that.
either.
But what I will say is you have a finite amount of time and you have to be ultra protective. I am way more protective of my time than my money because that's one thing that I it's very limited. Money's finite also, but your time is like so limited, man. And I was like, I can make more money if I allocate my time appropriately. So I feel like I'm very protective of that. All right. What else? Let's say if I was a brand new real estate investor and I want to get started, fixing and flipping probably is a good way to go because jumping into a $300 million fund is probably pretty intimidating for someone just getting started.
Absolutely.
But getting started is tough. So how would a listener or a new investor, stay motivated enough to go out there and change their life?
Good question. Will you stay motivated enough to change your life? Well,
Because look,
hey,
you're gonna fall, right? You're gonna fail. That's part of it.
yes.
And
Yeah.
a lot of times someone falls down and they don't get back up. So what makes the successful people get back up?
Yeah. We had a property we bought, perfect timing, 2020, 2021, right around there, right? Perfect timing for COVID. Worst time to buy. Everything purchased around that time has lost 30% of value today,
Oh
roughly,
no.
in the US. Our GC, general contractor, that we've negotiated with, found that the guy that could do the work for the cheapest amount without blowing us up, he died from COVID, right? Then all of a sudden,
Oh shit.
next GC is way more expensive. Now we have issues getting materials, like bad deal. I won't say it blew up, but it did not go according to plan. And then all of a sudden, nothing pencils. So what do? You know, we've seen a lot of syndicators kind of die off because you make money in syndications usually for purchasing the asset. So it's hard to run it. So if you don't have good standards, you're gonna be in a rough spot. So when things do happen, because like you said, Kevin, something bad's gonna happen. Your first deal is gonna go wrong, maybe your second deal is gonna go wrong, or some crazy life event like COVID or whatever happens, and all of a sudden it's hard to pick yourself back up. But I think having that why, like you talked about before, I've heard it called the why times five, right? Why do I want to do this? Well, why do I want that? Why do I want that? And you get down to the basic level of whether it's supporting your family, providing a, generational wealth for your kids, so they don't have to worry about it, so they don't have to live the same life that you've lived. For me, it's really about the impact I make on other people, as well as supporting my parents, who've given up everything for me, Um, you got to find that why, and it's got to be big enough for you to keep going when things go wrong.
Yeah, love it. I think that's very great advice, Jesse. So here's what we're going to do now. I want to go through my notes. I did take a lot of notes. I did learn a lot in the episode. And I just want you to listen in and tell me what I might have missed, anything that should be added to my notes here. And then I want you to give us one final piece of advice if you could think of something. And then anything you want to talk about your fund and contact information and all of that.
Yep.
So first thing I wrote down here was YouTube University. So this is how you got started as a real estate investor. And all you're referring to is just being curious, right? Go out there and try to find the information. And right now it's easier than ever. YouTube makes it so easy. ChatGPT is making it easy too. Sometimes I'll have
Oh, yeah.
full conversation with this thing and I will learn so much. So just be curious and go check out YouTube University. 900,000 units owned by the government, 30% of them are failing their own livability standards. I guess I'm a little shocked when you first said that, but I guess I'm not overly shocked because look, the government can't run really anything well, especially public type stuff.
Yeah,
So that doesn't surprise me. That's why I don't love everything that's going on in the current administration, but one thing I do love is less regulation and more, privatizing things because it's more efficient that way. Our dollars go further.
absolutely.
Favorable financing. And that's exactly what you're doing with private public partnerships. So when you do that, it's favorable financing. You have a great tenant because it's the U.S. government, and then you elaborate further in the conversation about this. You love this niche or this type of business because it's almost recession proof, at least we think.
Yeah.
So I mean, that was my words, not yours, but you're thinking that it's going to help get through any kind of downturn that might be on the horizon. If you want to get better in this business, you want to get out there and get going. Don't shut up, he says. So tell people what you do, ask lots of questions, just don't be quiet. Some other advice: build on the plane or build while the plane's in the air, which sounds like it came from someone that came out of the Air Force. So what you're referring to there is you can't wait forever to get started, guys. Get off the runway, and then you're going to continue to improve as you go. Coaching. One of the things I love about coaching, I don't do any coaching, by the way, but I hire coaches all the time. One of the things I love is as long as I'm moving, they could kind of steer me, right? They can tell me go a little bit this way or a little bit this way. But if I'm just standing still, I have nowhere to go. So I have to be moving forward in order to get steered in the right direction. And then the number one key to success is overcoming your falls or your failures. And the way you do that is your why. And you went a little further and you said your why times 5. It's basically just asking why you want something 5 different times to get to the real core of it. So how did I do on my notes?
Oh, perfect. Yeah.
Cool. What's one final piece of advice for the listener?
Yeah. While we're talking about that, I was thinking about, you talked about coaching and mentorship. So in the beginning, you don't have money for coaching, right? Because
Right.
people want a lot of money. So my quick story about this is first mobile home park, I found 10 free mobile homes. The smartest guy in the world, right? I'm awesome. And I know how to rehab. I know how to flip a house, right? So did the rehab, 10 different units, saved so much money. I'm brilliant. And they all failed just over time because I didn't know mobile homes as well as I should have. So I didn't have money for coaching. I didn't have money for mentorship. But if I had somebody say, Jesse, good plan, move it 2 inches to the left or right, then it would have worked out perfectly, right?
Yeah.
I just didn't know the electrical issues that I didn't know how to fix. And because of that, we lost, I think it's about $1 million of valuation, which we ended up saving later on, but still not a great first hard knock you get, So yeah, that's a big one. Find good mentors, find good coaches. I don't have a coaching platform either, but they make a huge difference. And as you grow, there's always going to be a part of the business you don't know, whether it's marketing, whether it's sales, leads, anything else, lending. There's experts out there. Hire them if you can. If you can't, just get more mentors and more coaching to help you.
When it goes to surrounding yourself, like we talked about earlier, with the right people that are going to lift you up is one piece of it, but people that are smarter than you. I'm always trying to surround myself with people that are smarter than me. In fact, my company, when I want to hire people that I know are smarter than I am. And so, I mean, it doesn't have to be necessarily a paid coaching program, although I do recommend those. Just the people you hang out with, right?
Yep, absolutely.
All right. So tell us about your fund. How do we get involved? How do we get a hold of you?
All right. So yeah, again, $300 million fund focused on private-public partnerships. We'll be doing probably just 3 different cities around the U.S. If you're interested in learning more about that, how it works, what risk mitigation there is, reach out to me on either the website, impactgrowthcap.com, or my LinkedIn is Jesse Sells.
So it's JESSE-SELLS. We'll put all that in the show notes. Well, Jesse, man, you're busy. I know your team is quite small compared to what it once was, but I know you're still pretty busy, and you gave 45 minutes of your time here with me. So I truly appreciate it, man. Thank you so much for coming on. to the listener, you have other podcasts you could be tuning into, and you chose the Real Estate Educators podcast, and I am so grateful for you. I hope you got a lot of value. I know you did, as I did. Give us a 5-star review and share this episode with a friend. That goes a long way to helping us help more real estate investors just like you. And with that, I hope you make this day a great one. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.